All right, what is going on, everyone? How are we doing today? Happy Friday, and welcome back to another week of Dividend Happy Hour. We have a really fun episode, or I guess installment planned ahead of us, guys. So to kick things off, we'll just kind of run through the agenda real quick, and then we'll get right into it. You guys saw the thumbnail, you guys saw the title. The main topic of today's video is I'm going to talk to you a little bit about how I go about diversifying my dividend stock portfolio and couple different ways that you can, go about diversifying yours, and also talk about how my strategy for this has evolved over time over the last couple of years that I've been, investing in dividend stocks. So that's what we have coming up first. After that, guys, we are going to do a special little celebration toast in honor of hitting 10,000 subscribers on this channel, which I'll talk more about later in the video. But we're going to have a little celebration toast, and I'll be taking a shot of tequila and toasting here with you guys tonight in celebration of that. And after that, we'll just get into a little Q&A, a little hangout session. Maybe we'll look up some stocks, do some stock research, talk about some investing stuff, and whatever else is on everyone's mind. So that's what we have coming up first. Or I guess that's what we have coming up throughout the video, excuse me. Now, before we get into the main topic, I just want to ask you guys, so I know there's a couple of you guys out there, a handful of you guys, looks like we have about 30 on the stream right now, 30 different investors. Couple questions for you guys. Number one, where is everyone hailing from? I want to give some location shout outs real quick. And also number two, if you guys are sipping on something good tonight, let me know what you're drinking there in the live chat, or if you're watching the replay and have a cocktail or a beer or a glass of wine or something, let me know what you're sipping on there in the comments below. Personally, guys, I've been kind of on a wine kick lately. I still love my margaritas. Had a margarita maybe a couple days ago, a few days ago, but sometimes a little glass of wine just sounds good. A nice, relaxing glass of wine. So that's what I'm sipping on over here. Now, as far as the locations, let's see who we got. Here. Let's see. I see some familiar faces there in the live chat. We've got Stradivarius from Portugal. Welcome, my friend, all the way from Portugal. Thank you for joining. Shamir, as always, hailing from Canada. Shamir, good to see you, my friend. Who else we got? We have Wallet Invest out there in Chicago. Ryan out there in Portland, Oregon. Taylor there in Texas. We got Nick in Nevada, down in Las Vegas, if I remember correctly. We got Steven in Elberton, Georgia. Mr. Klieg there in South Dakota in the house. Will, all the way from Kansas City. Nice. We have Dennis from Atlanta sipping a local IPA. Yeah, that's awesome, man. Good for you. We have Ryan also sipping an IPA. Taylor in Northeast Ohio sipping on some ginger beer. Ginger beers are really good. I love me some ginger beer. We've got Jark, JARC02 in South Jersey. We've got, Taylor sipping on a little Jack Daniels. Well, hey, cheers to you. Cookie Monsters over there in Reading, Pennsylvania. Hopefully I pronounced that right. We got Fenders, a.k.a. Mr. Income out there in Iowa. We got Kevin there in Yakima, Washington. Cass, home of the Kings. That's Sacramento, home of the Kings. That's where I'm at. Who else we got in here? James in Michigan. We've got Nick from Indiana. A couple more. Julius out there in Texas. And who else we got here? Mountain High there. Still in Manchester, New Hampshire. Yep, right where we left you. Oh, Pedro, another international investor from Portugal. Good for you, man. Thank you for joining. Anthony out there in New York. And yeah, looks like that's about it, guys. And also as far as some cocktails, I see some Mexican Mule. Saw a couple IPAs. We're going to have a fun night, guys. Good. Glad you guys are, sipping on something good with me over here. So, hey, cheers to you guys real quick. We'll get into it. Actually, excuse me, one more thing before we get into the main topic. I do want to give a quick shout out. I've been really liking doing these kind of weekly shout outs. It's just kind of showcasing your guys' milestones, showcasing the progress in your guys' portfolios. Anytime I see someone, it's usually coming from the Discord. Sometimes it's in the comment section of my videos. But anytime I see you guys hitting cool milestones, whether it's, portfolio value or dividend income, or, maybe you hit 100 shares of a certain stock, I like to pass that along. I think that's really fun to see. And it's also great to hear how you guys, have your portfolios going. So I'm going to put this on the screen. This is from Alpha Romeo in the Discord, which, by the way, if you guys want to join the Discord group, the link's in the description, totally free. But his portfolio, this was, just over a week ago, his portfolio finally hit over six figures, which is a huge, huge milestone. I mean, you guys have probably heard that classic, I think it was Charlie Munger, right? That classic Charlie Munger quote where he says, you know, I don't care what you got to do. Maybe you got to take the bus, you got to use food stamps, you got to scrimp, you got to save. Whatever you have to do, you got to claw your way to that first six figures. Then after that, you can kind of ease off the brakes a little bit. So, you know, Alfa Romeo, man, you can chill a little bit. You hit that six figures, you're good to go. And congratulations, that's a really, really cool milestone. And with that said, I mean, if you guys have any milestones of your own, whether you have them tonight or in the future, please like drop them in the live chat. On the videos, if you watch my videos, drop them there. If you're in the Discord, drop them in the Discord. And I actually might make a specific channel in the Discord specifically for portfolio milestones, something I'm thinking about. But yeah, if you guys have any of those, definitely tag me in the Discord. I'd love to see that. So with that, guys, let's now move on and get into the main event tonight. We're going to be talking about some portfolio diversification. For those of you who are just kind of now joining the live stream, what we're doing today is I'm going to share with you guys how I diversify my dividend stock portfolio, and also how that's changed over the course of the last couple of years when I first started compared to today, because there's been a certain evolution in that process for me. So what we're going to do, guys, we're going to go over to the screen right here. Hopefully you guys can see that. And as we're going through it too, I'm gonna try and focus on the screen what I'm doing, but I'll bounce and I'll check the comments every once in a while. If it's tough to see, or if you guys want it enlarged or zoomed in a little bit more, just let me know. I can try and make that happen. But anyway, guys, this is my dividend portfolio here on my dividend portfolio tracking spreadsheet I made on Google Sheets. Totally free, once again, if you guys want to check that out. There's a link in the description. But what we're going to do is we're going to go over to this diversification tab right here, and you can see on this spreadsheet, we've got diversification by sector, diversification by stock, and even scrolling down, I have something here that shows the actual allocations in my portfolio versus some target allocations that I've kind of set for this portfolio here. And so when I first started dividend stock investing, I basically followed this to a T. The first thing I did is I set these kind of, I guess, more or less arbitrary numbers for the target allocations. I knew, and they've changed over time, like a handful of times actually. I knew I wanted a certain amount in communications, a certain amount in consumer discretionary. I was super hyped on consumer staples. So I had like 25% of my target allocation in consumer staples, you know, a little bit in energy, ETFs, financials, all the way across the board. And what I would try and do, guys, is I would try and make the actual allocation, so how my portfolio is actually diversified, line up to a T as best as I could to all of these target allocations. So based on that, like if I saw that I was low in consumer staples, I would know, okay, I either need to contribute more money to the consumer staple stocks in my portfolio, which would be companies like Procter & Gamble or Coca-Cola or Altria Group. I used to have Campbell's Soup Company, ones like that. I would know I either need to contribute more to those positions to bring it up to where the target is, or I need to add a new position in this sector to start building out a position there to reach that target allocation. So that was kind of my approach excuse me, when I first started out. And this sort of approach might be familiar to you guys if you use a platform. Let me log in here real quick. You know what? I'm going to stop sharing my screen because I don't know if it'll show my password. One sec. Boom. Okay. Sorry, guys. Bear with me. It's loading. Okay, we're in. So I'll go back over to the screen now. So I saw a comment. I need to get out of this real quick. Okay. So anyway, you might be familiar with that style or that way of diversifying your portfolio if you use M1 Finance, because this is exactly how they do it. So this is my Roth IRA on M1 Finance. I just called it Ryan's Roth. Real creative, I know. But anyway, you guys can see I have my portfolio, my Roth IRA, split up into 5 different ETFs. But over here, you know, those of you who are familiar with this platform know that M1 Finance pretty much divvies up your contributions based on specific allocations that you set. So in my portfolio here, I want a target allocation here in bold, 30% into SCHD, 30% into VU, 15% into VYMI, 15% into VWO, and 10% into VBR here, totaling 100%. Now, the number above this is the actual allocation. So I'm a little bit overweight in SCHD, I'm a little bit underweight in VU, and a little bit underweight in the rest of them. But it's more or less in line with the target allocation. So it's really not too bad. But excuse me. This is pretty much how M1 Finance works. And like I said, when I first started investing, I tried to diversify my portfolio in the same exact way. Now, in doing so, I did use a certain rule of thumb. Like, for example, and I still adhere to this day. I really try not to have any one stock. Let's actually zoom in a little bit. Let's actually zoom in a little bit over here. Let me make sure you guys can see that. Yeah. So I don't want to have any one stock be above 10% of my total portfolio. So we can see right here, Starbucks is getting close to that, 8.4%. At one time, Realty Income was dangerously close to that. It was like 9 point something percent of my total portfolio. And then, all the others here you can see are all less than 10%. But kind of my goal, and this is like the one thing I do adhere to, is I do try and make it so not one position is greater than 10%. I still don't want to be too overweight in one certain position. Now, how my strategy has evolved over time is, instead of, let's zoom back out actually real quick, instead of trying to match the actual allocations to the target allocations, I do it a little bit differently. Instead of kind of adhering to this, I like to try and buy for value. So instead of buying to reach a certain allocation target, I'm now buying to, I guess, average down on positions that are in my portfolio, or I'm more so trying to buy stocks that I think are out of value. So my purchases revolve less around trying to achieve like the perfect diversification balance in my portfolio. And instead, like, I'm trying to get the point across. I'm getting a little tongue-tied, but the focus is more these days on trying to buy value within my portfolio, or buy value, if I start a new position. So over here, looking at total gains and loss, I might want to buy more Intel because I can get it at a value compared to where my average cost per share is. The same thing is true with, well, maybe I want to buy more 3M for the same reason, or AT&T or Verizon. Let me highlight these, AT&T or Verizon, because I'm down on all these and they might be at a good value. So maybe I focus on those. And then as far as diversification goes, like, it might not make it line up to where I want as far as actual versus target goes, but that's okay, because the emphasis is not so much on reaching, the target allocation and trying to keep up with that, which admittedly is changing over time, like how I want this to be allocated, but it's more so just on buying stocks that are at a better value. And if I still use this same approach, like trying to make the actual allocations line up with the target allocations, I would be buying stocks like Procter & Gamble, which, if we go over to Seeking Alpha real quick, you guys will see it's not at any like sort of discernible discount. I'd be trying to buy stocks like Procter & Gamble, which has a 25 PE, or Coca-Cola, which, going over here, has a 26.5 PE. So, neither of which are at any sort of discount. And it's kind of funny. I mean, interestingly enough, I'm saying this coming off of the heels of actually picking up a share of Procter & Gamble earlier this week, which was just kind of like a snap decision, I just had a wild hair. I haven't bought Procter & Gamble in months, maybe over a year since I've contributed to that position, but I had some extra cash, and you guys I'll talk more about it in Sunday's video, but I don't know. I think I needed to make that clear, but it's not something I try and make a habit of. Like, I'm not trying to buy Procter & Gamble or Coca-Cola to, match the allocations. That's kind of the point I'm trying to convey. And the reason I've kind of changed this strategy and have shifted more towards buying value and not paying as much attention to how things are diversified is because over the course of, your investing career, over the course of decades, the decades you're probably going to be doing this, trying to keep up with certain allocations is not going to be the best, because it could result in you buying positions or adding to positions that are not at the best value, like Procter & Gamble or Coca-Cola today, which, over the course of your investing career could negatively impact your return versus trying to just buy stocks that are at an affordable valuation or a decent valuation. You're going to have a greater margin of safety. It should, if you're choosing the right stocks, if you're choosing high quality companies that will grow over time and are just at a, good beaten down price for whatever reason, then, you're establishing a nice margin of safety, and you should be due for some greater returns in the future. I guess the moral of the story really here, guys, is focusing on buying attractively valued companies is a better long-term strategy than trying to base your purchases on arbitrary allocation, targets. And having said that, like, if you're worried at all about diversification, and you're like a young guy like me, don't worry, because over the course of your investing career, there's going to be different market cycles, okay? Stocks in certain sectors are going to be going up in price while others are going down, and then you just shift your purchases depending on what's at a value and what's not. Sometimes, like, there's certain examples of stocks, we could talk about ones like Apple or ones like Microsoft or Costco, or even in some cases like the Procter and Gamble's and Coca-Cola's that don't ever appear to come down to the price we want them at. To which I would say, just be patient. Just be patient. Like I said, markets, they go in cycles, and I haven't been doing this that long, but I've certainly seen things go up and things go down. There was a period of time where it was a smart move to buy stocks like Chevron and ExxonMobil and Royal Dutch Shell because they were, at not too bad valuations. But look what's happened to those companies over the last year, over the last couple years. So it's definitely not the time to contribute to those positions, in my opinion. But I guess the moral of the story is, things have a way of going up and going down, and you just got to time your purchases to buy the stocks that are kind of on a downward trend. And over time, your portfolio will naturally balance out because of that. And then, if you really, just keep a close eye, just maybe stick to one rule of thumb. Like, I like the no stock greater than 10% allocation rule of thumb. It's not super stringent as far as diversification goes, but it does help you make certain that you're not too overweight in one particular position. So that's my take on diversification. That's really all I wanted to share with you on that note. And with that, I do have a quick question for you guys. I want to put this back on you. If you can answer in the live chat, that'd be awesome. If you're watching the replay, in the comments below, how do you go about diversifying your portfolios? Is there any sort of tools that you use to track diversification, or any sort of rules of thumb that you follow? I'd be curious to hear what you guys do and how you approach this. So let me know in the live chat or in the comments below. And also, if you guys have not done so already, please do me a couple quick favors. Number one, please hit the thumbs up on this live stream, on this video. That'd be awesome. I always get slack in the comments. Like, you guys will actually be good about telling me, hey, tell them to like and subscribe. Don't forget. I always forget. So I'm remembering right now. Hit the thumbs up on this video. And also, if you're not subscribed to the channel, please do me a favor if you like the content and hit that subscribe button. It would just let me know I'm doing a good job. So anyway, with that, guys. Oh, last thing too. If you guys want access, I know I said this a moment ago. Let me go over here. If you guys want access to the spreadsheet we were, looking at in this video right here, it's totally free. I just made it on Google Sheets, and there's a link to it in the description of this video. So you can check it out right there. And now with that, guys, let's, I really don't want to do this, but I told you guys I would. So I think now it's time to do our 10K subscribers toast. And I have a shot poured. I actually have it in my refrigerator right here. So it's just in there chilling. It was definitely like very room temperature, which is not great in here. I'm going to go grab it real quick. I'll be right back. Like, hang tight for just a second. You guys talk amongst yourselves real quick. Like, I'll be back 5 seconds. Okay. I'm not going to lie. I really don't want to do this. I hate taking shots. Okay. Before I do it, I want to catch up on some comments, see what's going on here. You guys are so ready for this. This is awesome. Okay. So, before I take this shot, just a few quick words. I mean, I'm almost 2 years, coming up at the end of October. I'll be officially 2 years into this YouTube journey here, and I don't know. It's kind of surreal that you guys actually watch my stuff and listen to my gibberish talk about investing and whatnot when you could be doing so many other things. And so with that, guys, I really do appreciate the support you guys show me on this channel. And I'm so stoked that we hit this cool milestone. It's not just me hitting it, really. We have this channel is really it's just one big, great community. We have a really tight-knit community of investors, and everyone's here helping each other become better investors and being supportive on each other's investing journey. And so, thank you guys so much for allowing me to ramble and help me build this channel. I think at some point, hopefully, I don't know when, but hopefully sometime soon, I'll be able to make this a full-time gig. That really is like the 10,000 subscribers is nice. That's a huge milestone, but really my ultimate goal is to be able to do this full time and put out not only more videos, but better videos, and be able to just take all of this stuff to a depth that I'm not currently able to. And I know that will happen over time, just with, consistency and whatnot, but it's also not possible without you guys. So with that said, here's to all of you guys. Here's to 10,000 subscribers. Here's to, for you guys, $10,000 in your accounts. Here's to hitting 6K Alfa Romeo. Here's to all these other things. Kevin, quit stalling. Yeah, I will. Here we go. Cheers to you guys. Oh, nah, never mind. Actually went down pretty smooth. So there's a trick. I don't know if you guys know this. There's a trick to drinking tequila. This is actually how you're supposed to drink it. So when you take a shot or when you take a sip, I learned this when I was recently in Mexico. What you're supposed to do before you, sip it, you're supposed to inhale, hold your breath, then sip it, swirl it around in your mouth. That's kind of how you get the taste for it, get the flavor for the tequila you're drinking. It doesn't work as well when you're drinking something like Jose Cuervo, which is what I just took a shot of. But otherwise, it's like that's how you're supposed to drink it. And you do it like that, swish it around in your mouth, get the flavor, and you swallow it. Because normally you get that burn, right? That's kind of the hard part about taking shots. But, didn't see. Okay. But anyway, that's how you're supposed to do it. And that's how you get the flavor for the tequila. It's actually a lot of fun. And I don't know, makes taking shots easier. So anyway, guys, actually wasn't that bad. But once again, just before we move on to the Q&A, thank you guys so much for all the support. It means a lot. And yeah, I'm just so excited to see what happens from here, but I only anticipate good things. So anyway, let's get into a little Q&A, guys. I'm going to scroll up in the comments here and see if I can find some comments to put on the screen, and we'll go through them. I know I saw a few come in. And with that too, if you guys have any particular stocks you want me to look up, wanted a quick opinion on, we can do that. So I'll be bouncing back and forth between here and Seeking Alpha and whatever. So, or if you guys have any other investing related questions, totally, whatever's on your guys' mind, I'm an open book here. So we have about, I've been really trying to just go for an hour on these things. I could totally go for 2. We've done that a few times. I just gotta, it's a lot though. So I'm gonna kind of cut this off around 6 o'clock, which means we have just under 40 minutes. So a lot of time to do Q&A. So let's see. Kevin, I don't know if this was for me. Kevin, if this question was for me, I'll answer it. I'll pretend like it was for me. It might not have been because I saw you were chatting with someone else before the stream started. But the question here is, any new positions, or are you just DCAing? I did start a new position this week, actually. And if you guys were on last week's live stream, you'll already know what this new position is. In case you missed last week's live stream, go watch it, or just wait until Sunday's video. I'm going to be putting out a video on Sunday, just going talking all about this new position I just started. But yeah, I'm super excited to unveil it to you guys. Like I said, if you were in last week's live stream, you'll already know what it is. But I'm super stoked about this new position. It was such a quick thing. I'll explain more Sunday, but yeah. Let's move on here. See what else we got. Man, let's keep going. Got to find a good one here. Okay. Target down today. Who is buying? What happened with Target? Let's actually jump over to Seeking Alpha real quick. I did not see what happened with Target, although I know they were supposed to report earnings, or maybe they did a couple days ago, huh? Yeah, so they reported earnings on the 17th. I actually didn't see what happened with their earnings. This is just a transcript. I don't want that. Okay, so they missed on earnings, and they also missed on revenue. Okay, well, I don't know. I don't know what to say. I mean, I'm not too upset about that. I'd like to see, excuse me, guys. I like to see the share price dropping down. Initially, and I actually, Mr. Income Fenders, if you're still in here, I'm starting to think you guys might remember this. I had a goal of buying Target at like $120 per share. That was kind of like my target price that I wanted to start a position at. And at this point, as time goes on, and we'll see what happens, anything's possible, but the more that time goes on, the more I'm thinking that's maybe kind of a pipe dream. So I might need to reevaluate my stance on my entry point on Target, but I'd still love to add that stock to my portfolio. 160s, still a little bit pricey for me. Let's see if it gets down into the 150s and maybe even sub 150s. I would have to reevaluate, but yeah, I do think 120 at this point is kind of a pipe dream. I mean, maybe even like between 130 and 140, that seems a little more doable, but we'll see what happens. Let me know your guys' thoughts on Target in the live chat too. Let's put up a new. Oh, okay. So Mountain High said, you're missing materials under actual allocations. I know. So that's just for my own. He's talking about, let's go back over the screen. So he's talking about this right here. I don't have the material sector listed here. And the reason for that, Mountain High, is because I just don't have any material stocks in my portfolio. So I didn't want to put it on the spreadsheet. But for the templated version, I do have the materials section or the materials sector listed there. Okay. Let's keep going. Okay. Okay, so this is a good question. Cass wants to know, what's your cost basis or average on Procter & Gamble? So let's go check it out real quick. So let's go back over here. So my cost basis on Procter & Gamble, if we go here, and this might be too small to see, so let's actually jump over to Seeking Alpha. Sorry about that, guys. Let's go over to the holdings. It'll show my average cost per share right here on Procter & Gamble. So my average cost per share is $135.11, okay? And the share price right now is about $150. So I guess I'm up about 11%. So not too bad. Not too bad. I love Procter & Gamble. I would love it if that stock came down a little bit more, like even more, so I could build out that position. I would love to make that like honestly, my number one, my number two, definitely top 5 position, like top 3 even. Just a really secure company in my eyes. Let's see, what else? Good question. Johnny here says, I want that Microsoft. It was close when it hit 245, but never pulled the trigger. I'll get it sometime. Yeah. It's just one of those stocks. Apple, Microsoft, I mentioned Costco earlier. And there's a handful of others too that we could talk about that just like never seem to be at the right price. And sure, it's like they're growing companies. And I think about ones like Microsoft. It's like, yeah, like they're probably going to continue it's going to be a good long-term investment. I think the same about Costco, but it's like, it's hard to justify starting a position in stocks like that when there's, undoubtedly other more attractively valued positions. That's kind of how I look at it. And I also think it pays to be patient. You never know what's going to happen in the market. Excuse me, guys. Got little sniffles going on. Let's see here. I see you guys, a lot of you guys talking about diversification says you used like a very similar method when you first started, and now you've kind of, it seems like we've had a similar evolution in how we diversify our portfolios or how we go about choosing what we're going to buy. That's good. And I think that really is a natural progression. When you first start investing, you don't know a lot about valuation. You don't know how to value companies. I'm still learning the ropes. But when you first start, you don't really have much to go off of. So you need to find, some way to choose what, how you're going to allocate your contributions. And so I don't know why I gravitated towards that or how I stumbled upon that method that I described early on in the stream. But yeah, it seemed to make sense to me at the time. And I guess it does make sense, but it's also, once you like kind of see the light in terms of valuation, then you change your perspective a little bit. Okay, Dividend Fire. This is actually going to be a really good question. So when both Target and Apple dropped down to 130s each, do you regret not starting a position? And if so, have you changed your buying price for both stocks? Honestly, I do regret not starting a position. At the time, I thought it would be realistic to get it in the 120s. Like maybe I thought, if it's down in the 130s, it's gonna, there's a chance it could go down to the 120s. So I guess that was a chance that I took, and it ended up not working out for me. But like I said, it pays to be patient, and let's see what happens in the coming year. I mean, there's still so much uncertainty on the direction of where the market's going to head. There's been talks definitely recently on whether what we've seen, in the last month or so is just like we're just heading back up for good, or whether it's just like what do they call it, like a dead cat bounce, or like a bear market rally before things really start heading south even farther. And so let's just see what happens. I mean, time's going to tell. I do regret not starting a position at those prices, because that was a pretty good opportunity, but I'm also not convinced that the opportunity won't arise again. And if it does, then I've learned my lesson and I won't be so slow to move, if that makes sense. Really good question. Let's see here, guys. Let's find another one. Oh, Snowden wants to know, where's the cat? Is it a male or female? So the cat's a male. His name's Peanut. And he's down. Let me see if I can lift my computer. And oh, you guys see him? He's right down. Well, you guys see where I'm trying to point. He's right down there by the couch. He's just chilling. My little co-pilot, my investment advisor, if anything. I get a lot of my stock picks from Peanut. Let's see here. Guys. Also, I'm seeing a lot of comments just saying congratulations and, you know, how the milestones well deserved. Thank you guys so much. I really appreciate it. Let's see here. Oh, Paris. Good question. Did you get your YouTube plaque? Not yet, my friend. I have about 90,000 subscribers to go before I get that. But hey, man, we'll see what happens this next year. Anything's possible. So Snowden, actually, this is a really great question. Can you tell me why you chose Schwab over Fidelity? Yeah, so I've pretty much always used Schwab. When I was younger, probably early teens, my parents started a custodian account for me, and my parents are big into investing too, real estate, stocks, which is how I first got into it. And they made a custodian account for myself and, you know, the rest of my siblings, and they did it on Charles Schwab. And the portfolio that I have now is the same one that I've had since I was, you know, 13. So I guess if you want to be technical, maybe even a little bit earlier, 12, 11. So I guess technically I've been investing in stocks for a long time, but I really consider my actual investing journey started a few years ago. Because prior to that, it was just like, I didn't care. I didn't know anything. But yeah, I chose Schwab. I guess I didn't really choose Schwab. It was kind of chosen for me. But I got to say, I'm really happy with Charles Schwab. I think it's a really great brokerage. And I think Fidelity's a really great brokerage too. I don't think you can go wrong with either of those two. And I think it also comes down to preference, right? So, you know, they both do the same thing. So it just depends on which one you like more. But yeah, I mean, I've been happy with Schwab. I was happy with Robinhood when I used Robinhood. Yeah, and I'm also very happy with M1 Finance. There's some really great platforms out there. I will say, though, I wish, at this stage in the game, I wish Charles Schwab would offer, I wish they would offer, I guess it'd be referral incentives like Robinhood does, like M1 Finance does, like Webull does. I don't know if they'll ever do that, but I would love, and I say that because I would love to see more people using Charles Schwab over things like Robinhood, I guess that's it. I would love to see more people using a brokerage like Charles Schwab than more so than Robinhood. I just think I feel more secure having my investments in Charles Schwab, which is just a more, I guess, dependable, tried and true broker. It's one of the OGs. Okay, let's see. Oh, Mountain High wants to know, is that a Mr. T shot glass? No, it's not. I'll show you this. So this is actually, it's got my name on it, and this is actually me. So I'll show you the picture in a sec, but I made, this was years ago now, maybe a decade ago. No, maybe 7-8 years ago. I made all these shot glasses for myself and my best friends, and I've got like 4 lifelong best friends. We've all been, you know, best friends since like kindergarten. And so I made shot glasses for all of us for like a Christmas gift. And so each friend got a shot glass of everyone. So I got, you know, everyone got a Ryan, everyone got a Bob, everyone got a Cameron, a Logan, a Boyer, and this is mine. So it's got my name, like I said, and it's got a picture of me. I just photoshopped something, and I'm wearing a sweater. I don't know if you guys can see that. I'm wearing a sweater that says fruitcake. So I don't know. I thought it was kind of funny. And then the other ones, like Cameron's, you know, just a jacked guy. Bob is an old man. Boyer's like Luke Skywalker with a lightsaber. All these different ones. So let's see here. Let's keep going. Oh, yeah. So now you guys are talking about the new stock in my portfolio. Yeah. So some of you guys know. Mountain High definitely knows because he was definitely the catalyst for that happening. You guys will see more on that Sunday. Jim here says, I followed Ryan's lead and I dumped AWR. You know, Jim, it's actually funny that you bring that up because I've been I mean, AWR just announced a pretty hefty dividend raise of 9%, if I remember correctly. And, nothing against AWR. I think I sold out of them to buy lows, but I've kind of been thinking more lately, like, was that a good move? Because AWR is such a stable, good company to have for the long term. It's a utility company, American States Water, for those of you who don't know. And, those are, I think Warren Buffett has called certain utility companies almost like bonds. And, it's just a it's a water utility, obviously, and water's a pretty hot commodity, so it's definitely a good investment for the long term. But I sold out of AWR to invest into Lowe's. Lowe's just seemed like it had a lot more good things going for it. Higher dividend growth, higher dividend yield. Both have very respectable dividend growth histories. Both dividend kings. So, but I guess overall it was a good move. Paris here says, how many total positions do I have now? Let's look, because I don't know. I think it's 23. Let's look, though. Remove this. So go over here. So all these positions, 2 to 20. So 2. I think that's 23, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, 23 positions. 23 positions total. And I'll tell you what, Paris, or all you guys really, I'm really not trying to add too many more positions. I don't want to have too many different things going on in my portfolio. I mean, at most, I have my sight set on buying Target, on Apple. There's a couple other stocks in my due diligence list, on my watch list, that I would love to add to. But at least in the near future, I don't see myself getting above 25, 26 positions at most. If I could add Target, if I could add Apple at the right price, I think I'd be solid. I'd be in a really great spot there, and probably wouldn't feel the need to add to any new positions for a while. Let's see. Okay, so this is actually an interesting point. So Nick says, don't overthink getting the perfect price. If you like the company, dollar cost average over time. You're in this for decades. Yeah, I understand that for sure. And especially in terms of stocks like Apple and Target, I do get that. Because at least in terms of Target's still down a lot for the year. So if we go back over to the screen, guys, Target is still down, I think over 20% for the year still, right? So year to date, down 28%, almost 30%, right? Before they had that huge drop, they were above $200 per share. So, it's relatively cheaper than it was for sure. But still, part of me is thinking I do think interest rates will continue to go up. For now, I still think we're going to see some compression in the market. And, retail companies like Target are still, Target didn't report really good earnings. And this is after their last quarterly earnings, which were not great at all either. And their last quarterly earnings, if I remember correctly, it was kind of like them ripping the Band-Aid off, saying we did terribly. We're going to lower prices and get rid of a lot of this inventory that we have. And even after that, I think even between those quarterly earnings reports and this one, I think they changed guidance a little bit. I could have that wrong. I need to read up on it more, but I think they changed guidance once or twice. Either way, they set the bar really low for this quarter, and they still missed. And it would not surprise me if they continued to miss at least for 1 or 2 more quarters, because energy prices are coming down a little bit, but they're still high. Margins are still compressed for a lot of these big retailers, so I can't help but think that the share price is going to reflect that more as time goes on. So, like I said, I'm going to still be patient for certain companies like this. I don't think I'd be totally wrecked if I started a position in Target or Apple today, but I just started a new position in a different stock, so I can still, focus. I can focus on building out that position while I'm waiting to see what happens with Apple and in Target. And I'll tell you what, I'm not as eager to invest in Apple as I am with Target, just because I am more of a dividend investor. And I mean, as you guys know, the yield on Apple is just really nothing. So going back to what I was saying earlier, Mr. Income. Yeah, I do remember Target stunk it up about as bad as possible twice. 150 again might be reasonable. Yeah. Let's see what happens. Let's see what happens at 150. Let's just see what happens, guys. Let's see. Keep going, guys. Some good comments. I'm seeing some really good comments from you guys. Oh, Mountain High says Apple 120 or below, and that is still overvalued. Really? Why do you think that? I'm not disagreeing, but I'm curious to know why that's your stance. Let's see. Zal joined the live stream. Zal, welcome, man. Good to have you in here. Okay, Billy here. Good question. Have you ever looked at ORI? An old boring insurance company. It has 3.5 to 4% yield. Last year it paid a special dividend twice and just announced today another special. ORI, Procter & Gamble, JP Morgan, Apple, SCHD. So let's take a look real quick at ORI. I'm not familiar with it. And I'll remove this from the screen so we've got more viewing here, better view. Old Republic International Corporation. So right off the bat, guys, share price performance up a little bit year to date. In the last month, they've really jumped up 11%, but a lot of stocks have seen double-digit gains in the last month, so that's not, too surprising. PE ratio is 9.32. But for a company in this sector, we'd look more at the price to book. So let's go over to the valuation page. Excuse me. Price to book. 1.18 for the forward price to book, which is about 4% lower than the sector median. That's not too bad. That's really not too bad. Let's take a look compared to some of its peers. Who are their peers, really? So ORI, I haven't heard of any of these other companies. So let's actually go back here. Look at the dividends. Yield's not bad, like you said, just under 4%. Very low payout ratio, 30%. 5-year growth rates are really nothing to speak of. The dividend growth history, 30 consecutive years. So that's nice. How long have they been paying the dividend? So they've been paying the dividend for 40 years straight. That's great. And he's right, like some nice special dividends going on here. Now let's take a look at the financials just very briefly. So looking at the income statement, we're seeing some, as far as total revenues go, we are seeing some slow growth for the most part. 2020, they were down compared to 2019. Okay, we'll give them a pass for that. 2021, they've definitely bounced back. In the trailing 12 months, they're down a little bit compared to 2021, but let's see how the rest of the year plays out. So not too bad total revenues. The payout ratio here looks like it's kind of all over the place, actually. Since 2017, we see 35%, 61%, 22%, 44, 16, 26. So I guess really in the last 3 years, it's been on the lower end, but that still is kind of a swingy payout ratio. But even so, at its highest, not too terrible, 62%. That's a bit high, but everything after that's not bad. Let's see what else we can find. What are they doing as far as shares outstanding? So it looks like they've been issuing some shares, so that's not too ideal. I'd have to look in more to see exactly why that is. What else can we look at? Let's take a look at the balance sheet real quick too. So taking a look at the total investments, that's good. Okay, that's going up over time. Other assets, well, it shows short-term assets, cash, stuff like that here. So cash and equivalents, 100 million. Not really. So investments, 15.8 plus 100 million in cash. What's their debt looking like? The debt's kind of, and to be fair, I'm not the best at valuing insurance companies, so I might kind of have this backward, but the debt does not look to be well, maybe not. 1.4 million in debt, but 15 million in total investments. How much are these in? So debt securities, what about in equity and preferred securities? So that's probably not too bad. If they really had to, they could sell some of the equity in their securities here and use that to pay down the debt or pay off the debt, and they'd still have, tons left over. So that's not bad. What's the cash flow looking like? I don't even know if you use cash flow for insurance companies. I don't think so. So maybe net income, not bad. So maybe the debt's not too bad. So I don't know. It doesn't look to be too bad of a company, but let's compare this to something like an Aflac. Let's just take a look at the dividend growth. And remember, guys, we saw pretty average yield for ORI and not much dividend growth, like 3% for both of them. The starting yield for Aflac's lower, 2.5%, but look at that 5-year growth rate, way higher, 11.5%, and even more years of consecutive dividend growth with a lower payout ratio. So, if we're just basing it on the dividend stats, personally, I would opt for more Aflac, and let's take a look at Allstate and see. I haven't looked at Allstate for a while, but they used to be on my watch list. Kind of the same thing. Allstate has a much higher payout ratio, similar yield, higher growth rate, less dividend growth. So if we're just basing this on dividend stats, I'd say Aflac's probably the best looking, but that's not everything, obviously. So, but yeah, thank you for that stock recommendation. Good to check that out. Okay, and then Mountain High says, I saw quite a few people talking about ORI on another Discord this morning. So maybe the draw to this company is the special dividend. And I know personally, what was that? What was that mining company that put out? Maybe it's LYB I'm thinking of. Isn't there some mining company that's notorious for putting out special dividends, like high ones? I could have that wrong. Cookie Monster here. Really good questions. Let me take a sip real quick, guys. What are your thoughts on ADM, MSM, and your next goal for the channel? So let's take this one by one. I haven't looked into any of these stocks, but let's go back over to the screen real quick. Let's look at ADM first of all. Archer Daniels. Okay, I have heard of this company. I don't know exactly what they do, but I have heard the name. So share price performance, they're doing a really good year to date. Definitely beating, I mean, let's go over here. Look at how they're beating the major indices. Let's add the Dow Jones and let's add the NASDAQ. And is that the NASDAQ? Yeah. Let's add these two. So it's just crushing like the broader market, right? While the, three major indices are down, like Archer Daniels is just crushing it. I want to see what these guys do. Like I said, I'm familiar with the name, but I don't know what this company does. So let's scroll down. They're in consumer staples, agricultural products. They've been around since 1902, so they definitely have been around the block a couple times. So transport stores, processes, and merchandises, agricultural commodities, products, and ingredients. And it looks like they're pretty diversified in terms of location. So it looks like they do business really all across the world. So that's great. Ag services and oil seeds, carbohydrate solutions, and nutrition are their three segments. Okay, so they work primarily with some raw materials. Cool. I'll have to read more into this company, but this seems pretty nice. I mean, I don't know about the PE ratio is not bad, 13, which is lower than what we're seeing in a lot of other consumer staples stocks right now, right? Like Procter & Gamble, like and Coca-Cola, like we saw, were in the mid-20s for the PE ratio. So definitely at a better valuation compared to the rest of the sector, and actually quite considerably so, 35% lower than the sector median. And also, I guess, compared to its historical 5-year average, it's still even more discounted, right? And the price to book's really not bad either, just about under 2, but I guess this is higher than its 5-year average price to book by quite a bit. Anyway, it doesn't look too bad, but let's go take a look at the dividend stats. So lower yield, low payout ratio, low 5-year growth rate. The low payout ratio is good too, and pretty decent dividend growth history. Now, I gotta say though, like this doesn't do it for me. The 5-year growth rate and the forward dividend yield, like I don't know. I don't know if this is the right way to think, but I'd have a hard time starting a position in a stock like this when I know in my portfolio, it's like, why would I add, unless like just for the sake of diversification, why would I add Archer Daniels or stock like that when I can just contribute more to a Lowe's, that has maybe a lower yield, or maybe a higher yield, actually, I don't remember, but a much higher dividend growth CAGR and also a dividend growth history. I don't know if that's the right train of thought, and it's probably, I don't always default to that way of thinking, but when I look at something like Archer Daniels, and I guess when considering starting a new position, I don't know, that's where my mind goes. But now let's go take a look at the second stock, MSM, which I'm also not familiar with. So MSM, Industrial Direct Company. So I actually just want to start and see like what this company even does. So distributes metalworking and maintenance, repair, and operations products in the US, Canada, Mexico, and UK. So they have some international exposure as well. They've been around the block too. They were founded in 1941. So that's pretty good. Okay. I'd have to read more to get, a better understanding of what they do. The PE ratio is 14.11. Taking a look at the valuation, I guess it's not too bad. 16% lower than the sector median, 10% lower than the 5-year average. Now looking at the dividend stats, this actually is not too bad. So 3.5% yield. Payout ratio is like just above 50%. That's not bad. 5-year growth rates in the double digits with 0 years of dividend growth. The dividend seems very spotty though. Very spotty. So I don't know. I don't know about that. It does say they pay quarterly though. Anyway, I don't know. I once again, I think there's better prospects in the industrial sector. Like I'd be more inclined to add more to Lockheed Martin or add more to Snap-on, man. I would 10 times over add more to Snap-on than I would probably add to this company. But having said that, I also didn't look at the financials, so maybe I should hold my tongue. Oh, the next question too. Sorry, from Cookie Monster. Your next goal for the channel, ma'am. In general, just the goal is to continue growing it as quick as I can, as best as I can, and also continually try and improve the quality of these videos. That's something I've really been trying to learn more about. I spend a lot of time in the analytics of my videos, looking at click-through rates, looking at audience retention, see how long you guys are watching, where you typically dip out on the videos, stop watching, and what you go back and watch. I don't know. I'm just trying to get a better understanding of what's working and what's not working for my channel, and that's just a never-ending process. But I've definitely seen results from excuse me, I've definitely seen, better results from keeping an eye on those things. So next goal for the channel is just continue growing it, trying to become a better creator and also a more knowledgeable investor. So the video quality hopefully will improve, as well as the information in the videos, both of which are a never-ending process. Next goal for the channel, I don't want to speak too soon, but I've actually thought about, and might, like even within the next month, starting something extracurricular on top of these videos. I don't know exactly what that will be yet. I have some ideas. I'm going to keep, oh, there's Peanut. I'm going to keep my cards close to my chest yet, because I don't want to, or for now, because I don't want to say I'm going to do something and then change my mind. So I have some ideas that I'm thinking of, but I think I'd like to do something off YouTube that's still, some sort of content, free content. Maybe it's not videos, maybe it's something written, maybe it's something just audio. I don't quite know yet, but I'd like to do something in addition to these videos and kind of diversify the content I'm putting out a little bit more. Let's see here. Let's keep going. Good questions, though. Let's see here. Take another sip of wine as I'm finding a comment. Snowden wants to know, Tesla to buy before or after the split? Might fall lower like Google or Amazon. Man, I don't know. You're asking the wrong guy there. I don't keep track of Tesla. I don't keep track of Google. I don't keep track of Amazon at all. Only dividend stocks for Ryan. Jim wants to know here, does Schwab and Fidelity allow for the purchase of fractional shares? Yes, Schwab, I can't speak to Fidelity. I think they do, but Schwab allows fractional shares on pretty much any stock in the S&P 500. I think that's their how they approach fractional shares. And they have something called stock slices. That's their version of fractional shares. So things like ETFs like SCHD, VTI, VU, you won't be able to buy fractional shares, but others like Altria Group or Starbucks or Apple, Microsoft, kind of the big name blue chip companies, you can buy fractional shares. Let's keep going, guys. You guys are laughing at the shot glass. That's hilarious. Oh, this is a good idea. So Paolo, make it to sell here as Ryan's store. I will get one to contribute to your successes. Thank you. And that's something that's on my radar too. You guys know me. I'm a big coffee drinker. I'm a big margarita drinker. I mean, you guys saw me take a shot. Just tequila in general, I really like. There's things that I really like that I make a part of this channel, like the coffee drinking and the Starbucks and the margaritas and stuff like that. I do think it'd be fun to create some merch around that stuff, and that's something that's on my brain too. Anytime I come up with ideas like this, I'm always writing it down so I don't forget. So maybe going back to Cookie Monster's question about the future of this channel, maybe you'll see a couple new things come at once, maybe some additional content off YouTube, and also maybe some merch or something. We'll see. I don't want to put too much on my plate at one time, because I really don't want to dilute anything I'm doing. I'm the type of person that I just want to focus. It's very tempting to do all these things at once, but I really try and just focus on one thing, at least until I feel like I have a good grasp and a good regimen with that one thing. Like, I feel like I'm in a really great spot with YouTube, where I have a good system going, I have a good schedule, I'm able to push out these videos no problem, and I can fit it into my week. And now that I'm on a good roll with this, I feel like I can maybe start adding something else. And I've even thought about adding a third video in, or I guess technically a fourth if you count the live stream, adding another video in throughout the week and switching up the schedule, just doing more content on here. I don't know. I like the idea of doing merch though. That'd be fun. let's see here. Um, okay, guys, keep finding another comment here. Okay. Oh, you know what, guys? I actually have a question for you. Let's go over to the screen. For those of you who use the dividend tracker, dividend tracker. Let me see if it'll just log me in here. I don't want to. Okay. So for those of you guys who use the dividend tracker, okay, do you know what's going on with this? So scrolling down, this security right here, HSPX. Does anybody know what the heck that is? If I click on it here in the dividend tracker, they have no idea what's going on with it. And I don't either. This just randomly showed up. I reconnected my, and I might be asking the wrong group of people, but I reconnected my portfolios here in M1 Finance yesterday, and it synced totally perfect. Like my portfolio value was spot on, as you can see here on the 18th, 39,000. And then it had my portfolio drop down to, it was all out of whack today, 36,800, which is definitely not my portfolio's actual value. So I don't know exactly what's going on, but I don't know. Maybe I thought you guys maybe would have some insight on this HSPX thing. Anyway, if you don't, no worries. Let's see. Okay, so Zal here says, how many do you consider too many? I'm not a fan of having too many holdings myself. That's a good question. I don't know that I have a certain number, but I don't like the idea of adding a new position while I'm working on building another one. So, like I was saying, I just added a new position this week, and I want some time to focus on building that position out till it's at least, 2, 3, 4% of my portfolio, depending on the stock and how big I want it to be. But I want to focus on building out the position at least to a certain allocation before I think about adding any new positions. Like, I don't want to be trying to build 3, 4, 5 different positions at once. So just kind of like I was saying with YouTube and whatnot, like I'm just trying to do one thing at a time. So like this new stock, for example, that I just added, I'm going to focus on building that out. And then maybe when that's like good to go, like right where I want it, I don't want a super big allocation with this one, but when it's where I want it, then I'll consider adding a new position unless I see an opportunity with any of the stocks on my buy list, the two right now being Target and Apple, in which case I would make an exception. But I guess at this point, like, I personally don't see a reason for me to have, at this point, this will change over time as I expand my portfolio slowly but surely. But at this point, I don't see myself wanting to have over like 25, maybe 26 different positions at one time. I think that just with what I have now and with what's on my radar, I think that's great. So, and Snowden's right here too. Like, you can never have too many, but at the same time, if you have like 100 stocks in your portfolio, it's kind of hard to keep up with, and that's fine. Like, if you don't want to, pay too much attention to the stocks that you own, but, and I'll admit, I don't listen to every single earnings call for the stocks that are in my portfolio, but I try and keep tabs on the ones that I have. And at a certain point, like, I'm only one guy, at a certain point, it just gets to be a lot. So unless this was like a full-time job, then maybe that's a different story, which I'm trying to make it. So, we'll see what happens, guys. Let's see. Find another comment here. Yeah, so Target will shake out their issues after another quarter. I definitely think it will take at least another quarter. And I think over the long term, they will for sure shake out their issues. I'm a big Target customer. I love Target. And so I look forward to having it in my portfolio, but I wouldn't be surprised if it comes down in share price a little bit more for now in the short term. So let's keep going, guys. Sorry. Let's see. Sorry, guys. I'm just trying to find another comment. I'm also trying to get caught up. Like, where I'm looking right now, it's like 5:45. So I'm like 15 minutes behind, and it's about 6 o'clock, which means I probably won't answer too many more questions, maybe like one or two. And so Mountain High says, this was from earlier, didn't Aflac or Allstate just come out saying they're using a loophole to inflate their profits? I don't know. Maybe. I haven't been keeping tabs on either of those companies. You could be right about that. Oh, and then Joel here says, Joel, good to see you in the stream, man. Hope you're doing well. Joel says Vail. So I was asking about a mining company that has a tendency to give out those special dividends, and I think Joel is saying that it's Vail, and I think he's right. And in fact, I think I heard about that company from you, Joel, if I remember correctly. I don't know where else I would have heard it. Um, oh, I also could be thinking of Zim. To Zaldath's point, maybe it's both of them I'm thinking of. I don't know. But Zim wasn't Zim the one. Wasn't Zim the one that had like a crazy high dividend yield, like multiple double digits? Like it was high, wasn't it? Excuse me. Let's keep going. Let's get like one or two more comments, guys. Let's see. Sorry, guys. I'm just trying to find a good one here. Man, we have 102 people in the live stream tonight. That's awesome. Usually on these Fridays, guys, we've been hardly breaking like 80 or 90. So it's good to see the triple digits. Everyone, guys, all of those of you who are in here right now, thank you so much for hanging out with me tonight. I really love doing this. I love doing these live streams. And that's something I'm considering too. If I had more time to do this, I would maybe add another live stream session throughout the week, or maybe like extend the duration of this one. Mountain High, this is like such a nice compliment. I follow a few other YouTube channels, but always enjoy your content above all the others, as I feel our investing styles are similar. Well, man, thank you so much. That's incredible feedback. I gotta say, like, I've only been doing this a couple years, and I know, like, this is no surprise to anyone. I know there's people out there who have more in-depth information, who are better with the numbers. But really with this channel, guys, I've just tried to approach it more so. I've tried to reach a balance between like showing you guys what I'm doing and trying to explain the moves that I'm making in my portfolio. And also talking about other dividend stocks. That's where like the best stocks to buy come in, or certain stocks that are undervalued. So as I'm doing like stock research, I try and share that as well. And that's kind of the balance I'm trying to reach. And, like I said, I'm out of all the finance YouTubers, the other dividend investors, I'm not the best with the numbers. I don't know financial statements as well as other creators might. I'm working on it. I am working on it. And I've definitely come a long way, but we have fun here. That's what it's all about. So Christian, really good question. Do you like mezcal? I love mezcal. Absolutely. I actually arguably like mezcal more than tequila. And actually, so Christian, I don't know how long you've been around the channel, but so last month in July, beginning of July, I went to Mexico for one of my friend's weddings, and we did this tequila tasting, and super cool experience. And so basically there were they laid out 6 different tequilas, and each tequila had a different food pairing with it. And I think like 2 or 3 of those were different mezcals, all like super small batch, like, family run, would you call them distilleries? I don't know. Family run companies though. And it was so cool, so much fun. And it definitely makes you like appreciate the spirit even more, just kind of knowing the story and the history behind it and how it works. So let's see here. Let's keep going. Oh, so Rex here says JJ so Rex here is talking about JJ Buckner being involved with the dividend tracker. Yeah, so JJ is one of the creators of it. He's a homie of mine. Good guy, really good guy. And he is one of the creators of the dividend tracker. And I cut them some slack. Like I'll admit, it's a platform that I really like. I love the layout of the dividend tracker. I really like using it, but I will say, and they'll admit it, like they're not shy to say, if you have the premium version of the dividend tracker, they'll talk about it in the Discord group that goes along with that. They're aware of the issues, and it's a newer company, it's a newer platform, and they just have some kinks that they need to work out. And so over time they will. I think they have a really good product, and I think it's getting better over time. It's got some kinks it needs to work out, but they'll get there for sure. And Cass here says, is the dividend tracker reliable? I mean, like Mountain High says here, this is the best way to put it. It's a little buggy from time to time. And it seems like they're quick to fix the issues, but then other issues arise. It's like as soon as they fix one thing, something else pops up. And that's just, it is what it is, I guess. But I'd say my only two issues really with the platform are that, number one, it can be slow to load sometimes. Like there's kind of a lag between like when you click things and when it actually loads. It's not related to your internet connection. I think it may be a server issue or something. But then like sometimes the portfolio information is inaccurate. Like well, I'll just show you guys. I mean, we kind of, if I'm still logged in here, yeah, I'll go back over here. So like I was kind of saying earlier, if you guys caught it, this right here is not how my portfolio is valued. And just yesterday it was accurate because I had to reconnect it, and it was totally fine. Everything was copacetic. And then today it's like, it's all wonky again. But I'm wondering if it has something to do with this error issue at the top of the screen there. It totally could. I don't know, but I don't know. And I would say like until those sort of bugs get worked out, that's kind of why I have why I use my free portfolio tracker still. If the dividend tracker was, once those bugs are worked out, I could see myself steering away from my own Google spreadsheet and just using the dividend tracker, because at that point it has everything I need. So anyway, but Cass here says or asks, is it free? There is a free version. There is a premium version. The difference between the two, you actually get stock research with the premium version. That's pretty nice. I do like the layout of that. I'm so used to Seeking Alpha though, so I'm still using that. But you get full like stock research with the premium version. You get access to a premium Discord group. You get unlimited portfolios that can auto-populate and auto-update the information. It'll pull it directly from your brokerage. And there's a good handful of other, premium features that come along with it. But, I think at least the free version's worth checking out. And the premium version's really not, it's not going to break the bank. It's only $10 a month, I think. So it's not too bad. Okay, guys, let's go one more. This is let me see here. I think I found one comment that I want to. Okay, two more questions. I have them picked out here. So this is a really good one from Christian. How involved is your girlfriend with investing? I'm trying to get my girlfriend into it, but she's not getting into it. So, I mean, my girlfriend Kayla's, she's pretty good about it. She's got a Robinhood portfolio. She's been doing it now for, I think, a year and some change, maybe less than 2 years, maybe coming up in 2 years. I don't know, but she invests every single week. Her Robinhood will automatically transfer $25 or so into her portfolio. And, she's building it slowly but surely. I wouldn't say she does stock research or anything, but she's got skin in the game, and her portfolio is set up like the perfect way, I think. And I've talked about this before in previous videos, but something like this I think is a really good beginner portfolio. So she's split it amongst like 5 or 6 different holdings now. So VTI, the Vanguard Total Market Index ETF. So a good chunk is in VTI. She has Starbucks. She has Target. She has Coca-Cola. I know she has Dutch Bros. Not a dividend stock, but she used to work at Dutch Bros. She has Dutch Bros. And then there's one more that I'm missing. I don't remember what it is. She might hear me and tell me what it is. But yeah, she's got 5 or 6 different holdings. And I wouldn't say she's too into it, but she's got the diversification from VTI, and then the other stocks in her portfolio are ones that companies that she, uses and is very interested in. Big Starbucks customer, big Target customer. We both are, obviously. She used to work at Dutch Bros, big Dutch Bros gal. I actually really like Dutch Bros too. The coffee, not the stock. And then Coca-Cola, just, we drink Coke Zero, or she drinks Coke Zero, and her parents do, like it's going out of style. So, in really good companies. So that's kind of how she runs her portfolio. And it's tough. It's tough to get someone who's not into it. And, if I had any advice for you, Christian, on maybe how to get your girlfriend into it, just tell her, let me think here. I would tell her you don't have to do anything crazy, literally just $5 a week. Like, if you can just do $5 a week, that's so cool. And we'll put it in companies that you like. Like maybe your girlfriend's a Starbucks drinker. Maybe she's a Target customer. Think about things that she likes and places she spends her money at, and maybe help her build a portfolio around those things with, something like an SCHD or a VTI or a VU as a good, base for that portfolio. And then just like I said, $5 a week. And then she can maybe scale it from there if she gets more interested. So better than nothing. And, $5 a week, you can just, like, you're not asking for much, just $5. It's literally just $5. And, a year's going to go by, 2 years is going to go by. You don't even have to think about it. It's just going to automatically do its thing for you. And then, you can check it every once in a while and see how your portfolio is growing. And you'll, after a certain period of time, you'll have hundreds and hundreds of bucks in there. So anyway, last comment, guys. Where was it? Found a really good one from Cass here. Okay. So Cass says, how much do you pay for Seeking Alpha membership? Is it worth it? And is it reliable as well? I love Seeking Alpha. I've got to say, there's two platforms that I have the premium version for, Seeking Alpha and the Dividend Tracker. And there's obviously other platforms I use too, but man, Seeking Alpha is top notch. Seeking Alpha, if I only had to use one platform for the rest of my life, it would be Seeking Alpha. And I really love the premium version. And there's a few reasons that I love premium. Probably the most notable is that with the premium version of Seeking Alpha, you get access to an unlimited amount of the articles and news and analyses that are on there that you can read. With the free version, you only get 5, and I could do that. I could use those 5 in an hour, really. And so it's been a huge benefit being able to have unlimited access to all of that stuff. And I don't know if you can do this in the free version. I'm sure you could. But one really cool feature of Seeking Alpha, this is probably one of my other favorite features, is you can actually listen to the earnings calls right within the app. So I'll go back over here to Seeking Alpha. Let's go to something like let's go to like a Robert Half right here. So they recently reported earnings on July 21st. So you can go into this news article and it'll have the transcript, but you can see right here, you can actually play the earnings call right here. And so you can play the earnings call. It'll pop up with a little like media player down here. You can play, pause, fast forward, whatever, and just follow along with the transcript if you want to, or you can even pull up like the earnings presentation if you want to check that out. So I also think that's a really cool feature of Seeking Alpha. Some other premium versions are like a stock screener. I use that a lot. A stock compare tool, I don't use that as much. And then obviously you get access to more years of financial data, which is, that might benefit you, 10 years versus 5 years. And then you get like their dividend grades, or the grades on a lot of their stuff, which honestly, I could kind of take it or leave it. That's not a huge draw for me, but overall, I'm really stoked about Seeking Alpha. I actually have an affiliate link with them right now, and so I'm able to get premium for free, but prior to that I was paying for it for months, and I think I was paying something like $30 a month for it. I do know right now though they're running a special, and there's a link to it in the description of this video. Actually, let me see. The link might be in a different video. There's some sort of link in the description of this video. No, I need to find it, because this is like an actually really good special where normally their annual premium, their normal price for the premium for a whole year is $239, but they're doing a special right now where it's only like $100. And I mean, that you break that down, on a monthly basis, it's like super, super cheap. So $100 a year for Seeking Alpha Premium, and they even offer a free 7-day trial, so you can try premium for free. But I'll paste the link right here in the live chat, and copy and paste it into your browser if you want to check that out. So let's see here. I think that's pretty much it. Cass, hopefully that answers your question about Seeking Alpha. And if you guys do, I'm not going to plug myself too hard. If you guys do end up deciding to sign up for Seeking Alpha, Seeking Alpha Pro. If you guys do end up trying the Seeking Alpha Premium version, help your boy out here and use my affiliate link. There's one in the description of every single video, but the one that I just shared in the live chat here is it's $99 for a whole year's worth of Seeking Alpha Premium. It's over 50% off, like 55% off basically. So definitely worth it, and can't hurt to at least try the free 7-day trial. And then Mountain High here says, yeah, Seeking Alpha Pro for $199 a month. Yeah. And I haven't looked too deep into Pro. I mean, I would imagine for all of our purposes here on this stream and watching this video, that's kind of overkill. You don't need to spend that much on Seeking Alpha, but I will say the pro version is definitely worth it. Definitely worth it. So, but to that point, there's people who like other platforms who do similar things. Like some people like Seeking Alpha, like myself. Others would rather spend that money on Simply Safe Dividends or Fast Graphs or whatever other platform you want to come up with. So it does come out to a matter of preference. But I will say, if you're using the free version of Seeking Alpha, you might as well just use the premium version because it's way better and it's worth the cost. So that's my take. But yeah, if you guys do, like, this is the last I'll say. If you guys do, please, like, it would help me out if you use my my affiliate link. I get a little kickback from that, so that's awesome. Anyway, guys, callback to the future of the channel. Okay, Ryan's doing a callback to the future of the channel question. Referrals. Hey, man, got to make six figures somehow. And to be honest, and this is something that will hold true for like the rest of this channel's existence. Like, if I'm ever like promoting something or plugging something, I'm really not gonna do like random stuff. Like I've been hit up by a few companies that I've heard of, never have used, and stuff like that. It's like I'd rather not use that stuff and wait for other, like, I'd rather just wait for things that I'm actually going to use. And if I'm going to push stuff on you guys and try and promote an affiliate link or a sponsorship, it's going to be something that I think is relevant, or like something that I actually use in my daily life. And with that said, like, if like a tequila company or a margarita mix company or anything having to do with margaritas wants to sponsor the channel or sponsor the Dividend Happy Hour, I'm totally on board with that. If like a protein powder company or a supplement company wants to do the same, I'm A-okay with that as well. I guess the moral of the story is, I'll try not to be too long-winded. I guess the moral of the story is that, if ever there's things that I'm promoting on here, I'll make sure that they're things that I'm actually using or things that I actually think are worthwhile. That's important to me. So I don't want to be too spammy with you guys and just like promote things just to make a buck. So anyway, so someone here, I'm about to close it up, guys. I know I'm kind of lingering, but so who was it? Oh, so Steven, this is a good question. First time on the channel, randomly hit the channel. Well, hey man, thanks for joining. Big fan so far. Dividend investing for 5 years. Wow. How often do you do live streams? So I do these live streams once a week, every Friday, starting at 5 p.m. Pacific or 8 p.m. Eastern. And these live streams are called Dividend Happy Hour. So Steven, when you come hang out with us for the Dividend Happy Hour, obviously it's not mandatory or anything. We're not going to put a gun to your head, but it's always fun to come and hang out here with a cocktail or a beer or a wine. That's why whatever your drink of choice is, that's why we call it the Dividend Happy Hour. But hey, man, happy to see you in the live chat. Happy to have you on the channel. Welcome aboard. Thank you so much for tuning in. Yeah, guys, I know this is where I get into trouble. It's like 6:20. I said I wanted to be off by 6. I could seriously sit here all night and do this, but you guys keep asking. I'm seriously going to hop off soon, though. Bill, this is an important question. That link you posted above is the one to use. Yes. And as soon as the stream ends, I'll go and put it in the pinned comment of the replay, or I'll just put it in the description. That'd probably be better, Ryan. And this special too. So the special, that link that I shared, it's $99 for Seeking Alpha Premium for a year, where normally it's $239 for the year. And the deal's only going to be going for like a couple months, they told me. So I guess, take advantage of it while it's there. And, 7-day free trial. Like, try the trial. If you don't like it, cancel before the 7 days. You don't have to pay anything. It's not, it's worth it. It's worth a try. So anyway, guys, this is a good place to sign off. Thank you guys all once again so much for tuning into this live stream, for, coming and hanging out for another Dividend Happy Hour. And also, guys, thank you once again so much for 10,000 subscribers, for helping me grow this channel and being a part of this community, and also helping me be a better investor with all of your guys' insight, all of your advice, and all of your all of your guys' great stock research here in the comment section of the video and in the Discord and in emails. I really appreciate all of you guys, and I hope you all have a good weekend. Stay out of trouble, and I'll see you guys on Sunday. Sunday's video is going to be one worth tuning into. So I'll see you guys then.